All right. Welcome to this week's Sunday market prep. Basically, today's agenda, we're going to be talking about slumps, how to handle choppy markets. The news specifically that just came out recently, maybe about a half hour, 45 minutes ago now, with the US and Iran deal, how that will affect the commodity markets such as oil and energy. And then other various topics and potentially equities to focus on this week. I am Dave with Built by Trading. I mostly focus on equities and swing trading, on my own business, Built by Trading. But my mentor here, Babyfish, he has brought me into the commodities land and has kind of taken me under his wing as my mentor, which I greatly appreciate, and has given me a lot of other tools, specifically with the ACD methodology, and various other ways to shape and view the market. So I appreciate his help very much, and I really appreciate you coming on today and to share your thoughts and preparation. Babyfish, would you like to introduce yourself?
Yeah, so I don't think we should do this babyfish thing because it's going to get annoying.
Okay, Dan, it is.
This is Dan. Let's just do it that way because otherwise it's going to get
Call it Dan. All right, Dan, it is.
Yeah.
Cool.
Dan, aka Babyfish. I mean, a better way of doing this for those that know the moniker.
I'll do whatever you want.
Yeah, no, it's all good. Been doing this professionally for about north of 25 years. Started out on the institutional side, working for a bulge bracket firm back in the early 2000s, right before the dot-com crash. Started on the floor of the NYMEX and the NYBOT. So I was working in the pits, and then kind of transitioned later on into, as trading evolved, went from the pits into electronic, then went into other parts within the investment banking atmosphere, stratosphere, and then kind of, for lack of a better term, the atmosphere. Then went into the asset management side, which is where I currently am. My focus is more, in general, is more on an intraday, is more momentum-based commodity with momentum-based stock strategies. I specialize primarily in global macro on the equity side, interest rates, Fed policy, obviously specialized in commodity markets, specifically in energy and certain softs. And that's kind of what I do.
Awesome. Appreciate that introduction. We can see that we have a lot of valuable skills. You have a valuable skill set that we can all glean from you and learn from you, and we appreciate you sharing that with us. Starting off today, let's start with a quick market recap of last week. Going over it, the SPX, hang on, let me pull up a chart here. I had it pulled up, but it went away. It didn't really, we had a little bit of bounce, right? Especially after the jobs claim last week, or the jobs numbers coming in last week. But really, we discussed that. That's more so our thoughts are firms, funds, whomever it is, making headway, making room for the SpaceX coming out on Friday, right? So we got a little bounce on Thursday and Friday. Ultimately, we closed the week up like 0.65%. The trend is still up. The move, the volatility of this, and we touched upon that. It was a few weeks ago. You said and quote me if I'm wrong, but basically the volatility of these markets, any pullback gets bought up. And these pullbacks currently within these markets, they happen 10, 15%. I think this last prior one was 8.5%. I measured in a handful of days, instead of over a few days, or a couple of weeks, I should say. So you continue to think that these very rapid short-term pullbacks are going to be the theme of this current market?
I think the most recent retracement or pullback that we just had was very specific to SpaceX. We touched upon this last week. The fact is that because now SpaceX is public, so Friday was the launch, was the official IPO day. So in 15 days from now, it's going into the NDX, and just because of its market cap, it's going to be in the top 10 by weight. It might even be in the top 5 by weight. So if you were a index manager, you had no choice. You had to sell things you didn't want to sell because you just have no choice. You have to. So whether you were, let's say you're Invesco who runs the QQQ, or Infidelity, or BlackRock, or T. Rowe Price, or Vanguard, anyone who's running a NDX-based index, you had no choice. So some of the numbers that were thrown out, so one of them that I remember for sure was, let's say, Nvidia, I think, was something like $80 billion of stock that needed to be sold in order to make room to have enough cash to buy SpaceX. So it wasn't like
Wow.
it was a pullback because of news. It was really it was a forced selling to just make room for cash. Like they didn't have a choice.
Gotcha.
So now that's out of the way, the question becomes, now where do we go from here? So that's where it gets a little bit more complicated, because now, to a large extent, they've already bought it. Like the allocations that they needed to buy, they've bought. That's why, and we'll talk a little bit about the SpaceX IPO and how it traded a little bit later on, but it really traded in a way that was very not surprising based off of what it needed to do. So one of the things you have to realize is, or one of the things that people ask is, well, what's the rush? Like, why does it? That was part of the deal that Musk had with the NASDAQ, that in order for him to list with the NASDAQ, it's unofficial, but he had to be, it was 15 days. So because of that reason, he basically has a forced buyer. So that will support the stock for at least the next 15 to 30 days. The stock is going to be supported just because of this natural buying, and it's in the index. Now, if you look at, let's say, the top 5 holdings, top 10 holdings of the NDX, which happens to be Mag 7, and it is in the NYSE FANG, you can see, for the most part, they all pretty much look like crap. And not look like crap because there's something wrong. There was a forced sale. There was no choice. So now things are going to need a few days to, sort of recover, and things to balance themselves out. So, but that was a catalyst to kind of move the needle. So now that catalyst is kind of done. So now it's what happens now moving forward. So to answer your question, I think that the pullback is done. I think if we had retested the 50 one more time and had broken, I think we'd be having a different conversation. I think the fact that we've basically, to a large extent, are now sitting at about 55% of the move, and we're having a gap up now, which means that we're going to be reclaiming more than 50% of the move on the cash open tomorrow, basically tells you that the commitment to the selling is out of the way. So could we get a counter trend move on the open tomorrow? Sure, you can always get one. But the odds don't favor now that we're going to be back to the 50. The odds favor now that either we go up or we chop around until the next catalyst. But to break down and come down to, let's say, 70-50 on the S&P futures, or 71 or 7,000-ish on S&P cash, that thesis is kind of, out the window now, based off of where we are today and tonight.
For sure. I think that's a good segue into, you already mentioned it, how to trade choppy markets. I've been seeing a lot of thoughts, I should say, on X comparing, was it Friday, June 5th? That's when we had that 4.77% down move. Comparing that day to, it might have been October 10th, which was a Friday, it was down 3.49%. It was something in that early October where things kind of really changed, and we started to get that digestion within that range from basically October until April, when we actually broke out. We had that undercut of the, let's just say, 23,852 area, found support at 22,840, and then just ripped from there. So how do you, number one, what have you gleaned, or if there is anything, how do you know, or any signs that we can pick up on when choppy markets might begin? My first initial thought personally are days like June 5th on that Friday. Why? Because there's quite a bit of damage done on that day. And in order to typically undo that quote unquote damage, I'd imagine the time needs to be spent to digest what just happened. However, you can also say that this time it might be different, right? Specifically because the thought is this was for SpaceX. And so if it is that one thing that caused the sell-off, and now that is out of the way, we have retraced a good majority of that selling already, and now we're gapping up. The backdrop is also different compared to October 25. Would you agree with that? Yes or no? And then off of my question, how do you notice? What have you learned yourself to pick up when choppy markets may begin?
So it's an interesting question because I actually did this analysis in this week's video. And what I did was
Mhm.
I did a correlation. So the correlation was basically the SOXX against the S&P against the NDX against the NYSE FANG to see where the clues are, because the SOXX really took us up. Since April, that's really what's taken us up. And when you run that correlation and you look at how they're all performing, the NYSE FANG is the laggard, which does make it's actually sloping down, which actually makes a lot of sense because of what we talk about with SpaceX. But the SOX is
Mhm.
really, it still keeps propelling, it still keeps propelling forward, which means that the S&P and the NDX are both lagging the SOX. Now, is the momentum enough to keep it going? That's a separate issue. But for now, the SOX is really what's really pushing the market forward. So the SOX is pushing the NDX forward, which is pushing the Nasdaq Composite forward, which is then basically helping the S&P push forward, because a lot of these names are in. You have what in the top 10 of the S&P, you've got two semis in there, and the two of the bigger ones, Broadcom and as well as Nvidia, are in there.
Mhm.
So really, it's semis that are kind of driving everything for now. So it's very hard to say we're in a choppy market, and the primary reason is because of the semis. If the semis, for whatever reason, if that fizzles out, we will have a different conversation, because then the propulsion is not really there. That's really been driving us. It's really semis right now. So if you pull out, let's say, semis, you say, okay, if I disregard the semis and I just look at the broader market without semis, yeah, it's a lot of things look fine. A lot of things don't look fine. A lot of things are okay. The market isn't really, I wouldn't say it's rocking and rolling on all cylinders, because you do have a lot of haves and have nots. Interest rates are still a problem, which you have the economy is still to a large extent, regardless of what the jobs numbers say, the economy is still sluggish. It's still technically in a recession. Rates are still up there. There's talk that there's no rate cuts this year, and there might be even rate hikes.
Mhm.
So there is a lot of push pull. Regardless of, and we're going to get into this, I guess, a little later on, but regardless of what happened tonight with the deal, no deal, what kind of deal, whatever it is, and oil opening up, not opening, you still have a lot of issues that are going to hit the general economy. So, because of that reason, company earnings are not going to be as robust. You heard from Meta how Meta is, they're slashing jobs for AI. AI capex spend is really exploding. Google, in order to kind of finance it, is doing an equity offering to finance it. Meta's going to do the same kind of deal. You saw that, when Apple had their event last week. One of the things that a lot of Apple guys were saying, that are diehard Apple guys were saying, was that a lot of the announcements were all Google-based stuff. So the innovation part of Apple is kind of not there, which has been an issue
Mhm.
for God knows how long. So that's been an issue. But it seems as though the leadership is coming from specific places, mainly Google. Um, Nvidia is always going to be kind of in there because it's always a part of the conversation, but they don't really, the growth engine that they have versus what Google has is much different, because Google's going to market with chips that are half the price. They have Google has a wide array of products. There's a lot of things that Google can do that Nvidia can't do. As I know, it
Hmm.
sounds like kind of interesting, but there's key differences there. Um, and Meta can kind of piggyback off of what Google is doing to a certain extent. Obviously, they're an overlapping business on the advertising side, but and there is some overlap, but obviously they're a little bit of a different business. But there's a lot of things that some of these companies can do that an Nvidia can't do, or a Micron can't do, or a SanDisk can't do, because they're really just chip companies. So the question really becomes, if semis die out, what happens next? And that's where it gets, with about 4 to 6 weeks until earnings season starts again. There's, at least the way I'm viewing it, is I don't really see a real catalyst for propulsion if semis die out. So if you're asking how do you tell, your first tell would be if semis start to die out, that's going to be like your first clue. If you see that they're not pushing forward anymore and they're more chopping around and kind of flatlining, would be healthy for a lot of these names, but it starts to give you clues. So then it becomes a question of, where does rotation go for people that are trying to figure out where they need to be. And the reality is, with SpaceX going in 2 weeks, so you have the capital allocation, which is in 2 weeks. It's now, that puts us at, July 1st, July 2nd. So and then you've got, another week or two and you're back into earnings. So really, it's a touchy spot just because of what's happening over the course of the next 2 to 4 weeks.
Well said. So just to recap, in short, you look for the leaders of the market. It could be a sector, such as semiconductors right now. And if those leaders begin to die out, then that could be your first sign of a choppy market beginning.
Correct.
Now, yes, I think it is also important that we mention and then at least know, like, semiconductors are tech, right? XLK, and XLK makes up what, like 30 to 36% of the entire
39.
market.
39.
39, geez, even more. Yeah, 39% of the entire market. And so there's a lot of thoughts that, hey, money will rotate eventually out of these semis. They can't go forever.
So
People are calling
touch upon
tops
that
back in May, and then let me finish my thought so I can get it out there. And then back to and it continued to run into June, right? And so yes, money will rotate out of these names and into other places. However, the other places, they don't carry as much weight of the market. And so even though that money's flowing somewhere else, the overall market might not be as strong as the heavier weighted indexes. So
Correct.
thus we would also enter a choppy market because that money is outflowing from the strong names into something else that's not as heavily weighted. Does that make sense? Am I thinking of that properly?
No, you're right. You're right. Because at the end of the day, the big name indices, when the committee puts these things together, they basically look for performance. Whatever's performing, they kind of rejigger the index, and then, because they want to keep these things up at all costs. So because of that reason, they will maneuver the performers and maneuver out the underperformers, regardless of what the company is, to keep the indexes up, no matter what. Like I said, to keep them up at all costs to a certain extent. So the higher level indexes mask a lot of what's happening under the surface, depending on the sector. And the variance between, let's say, financials and tech, because those are your top two, is so, you could drive a truck through it. It's so wide that there's really no way to measure. You're talking about 39% versus like 11%. Like, how do what do you do with that? So there's always places to find, but you have to be really selective. And if you're, and it also depends on your time frame. If you're an intraday guy, or you're looking 2-3 days, you really have to be in momentum names. That's really where you need to be. You have to be there. You're kind of forced to it. If you're investing, it's a different situation because your time frame is much different. So you could be in a Coke. You get price appreciation throughout the year, but you're catching dividends, you're getting things. But if you're trading and you're looking to capture and create, real cash flow and really generate money, your hand is kind of forced, where you have to be
Mhm.
in those names, because otherwise, what are you really doing? Like, what are you doing? You're kind of wasting time.
Yeah, that's a pretty challenging thing, especially with. Let me find AMD's chart real quick. Just in general, these semi names, they've run so far in a short period of time, yet at the same time, they're still the place to be. You could always argue, oh, they're super extended, they're toppy, who else can buy, yada yada. But the fact of the matter is until the way that I see it, until something actually changes and things stop working in those names, you're forced to be, no matter how much you dislike how much they've moved, you still manage your risk appropriately within a short time frame. But you're forced to be there. What is it? 8 Micron from the lows of March 31st to the highs of June 3rd. 44 trading days, 244.75%. That's an
It doesn't
about.
make sense. It doesn't make sense.
Right. Right.
No,
But at
no,
the same
I'm not
time,
saying.
like, it's pretty
Let
wild.
me.
You're still forced to be there, right?
Yeah, but here's the thing, and you bring up a very good point, and you could do the same thing with SNDK also.
Mm-hmm.
We're not going to talk to the institution. We're talking more to the retail trader that maybe has an account size, maybe doesn't have an account size. I talk about this. I've been talking about this for a couple of videos already, and I'm going to continue to say it, whether people like it or not. On
Mm-hmm.
$1,000 name in the case of Micron, or a $2,000 name in the case of SNDK, how many shares are you really buying? How much can you afford to buy? That's
Mm-hmm.
realistically. And then you get the argument of, I'll do options. That's precisely where people are getting smoked, because they go into options, they get lucky because they don't know what they're doing. They all say they know what they're doing when they make all these exorbitant amounts of money, and then all of a sudden they get their clocks clean and they're like, oh, what happened? Realistically, like, and again, price is relative, but realistically, what are you going to do with this stuff? So, like, I feel like those are the places where people start to really, really become gamblers as opposed to traders. You want to be in certain things, that then be in things that actually make sense, that you can
Mm-hmm.
manage the risk. $1,000 name, a $2,000 name is going to have a very different volatility characteristic than a $200 name or a $100 name.
Right.
Granted, 1% is 1%, but there's a volatility to it that's just not there. So I feel like you have to be there, but at the same time, you kind of have to use your head also and use common sense. You know,
For sure.
and the biggest problem in the market now, more than anything else, is that common sense has been thrown out. Like when I first started, there was no guarantee stocks would go up. They were risk assets. I mean, they were really risk assets. And when you got up in age, you were basically adjusting your portfolio more away from stocks that were risk assets, more into bonds, which were less risky, so to speak, and are riskless assets. And nothing's riskless, but they were more riskless assets. Now, most retirees, they're at 80, 90% stocks, US equity stocks, US based stocks. So like there's a lot here like that really has changed to a certain extent. So I know it's a little bit contradictory to what I was saying a couple of minutes ago, but it's really understanding the participant and really understanding what is happening in the markets that really start to drive things. It's a certain point where, I always say this. How do you take advice from someone who hasn't been in the market long enough where the market's actually hurt them? And since 2010, you talk about 16 years, the market really hasn't hurt anybody. 2 3
Mm-hmm.
weeks of a down move is not hurting somebody. COVID lasted, what did it last? 3 weeks, a 35% move. Or was it 3 4 weeks? And that was about it.
Yeah,
That's not
something like
hurting
that.
somebody. Hurting somebody is you have a bear market for a year, 2 years. I mean, you're really hurting somebody. So like how do you deal with this? And the reality is it's understanding how the market participants are at play now. So it really goes down to a large extent, you're forced to be in the momentum names because the market is basically momentum now. That's really what it is. As weird as that's going to sound, you're not going to make as much money in a Coke or in a J&J as you would in a Nvidia or a Micron or a set. You're just not going to, because even when they pull forward, all these earnings and they pull it years in, the stocks still go up. So they still keep pushing them up. So the game has changed to a large extent where your hand is forced. If you really want to make money, your hand is forced. Now, if you're going into spies and Qs and you're going that way, you're the market, so it's fine. You don't have, you're getting your steady. It used to be the S&P on average went up 10%. Now it's about 15 to 20% year over year on average. So plus dividends, so you're still making money, so you're fine. But if you're going into, let's say, the value plays, you're not really making money there. That's why a lot of value guys are kind of out of business. Not everybody, but you don't really hear from them anymore.
Well said. Well said. All right.
So before you go,
How about this? Oh yeah.
Wait,
I'm listening.
Before you go. So the reality is, what do you do in a choppy market? How do you handle choppy markets? That was the initial question.
Oh yes.
So the truth of the matter is, once you identify that we're actually in a trading range, which right now we are not, pulling back is not a trading range. You'll know when we're in a trading range. And what do I mean by that? If you look back to, let's say, December through pretty much December 25 through February of 26, we were in a trading range. That was a range. Here, all we've done is just, we've retraced a little bit. We touched the 50. That's not really a range. Usually
Right.
your first key thing is that if you're a moving average trader, the first thing you're looking for is flattening out of moving averages. You don't have that right now. You may have some sloping down, maybe some curling because we had a move, so things are kind of catching up. But you don't really have anything that's signifying that we're in a choppy market. Absolutely not. It may feel like that, but I would not characterize this yet as a choppy market. Not yet, for sure. No. We had a retracement.
I would agree.
Now we're bouncing back. So, and we're going to have a gap tomorrow, right? We know already we're gapping for tomorrow. So let's assume that S&P cash tomorrow. I didn't figure out fair value, but let's assume that tomorrow morning fair value puts us, at the open at, I'll make up a number, at 74.70. Let's just say, okay. So really, what stops us from continuing to 7,500? Not much. It's a 70 handle move. That's 1% move. So why not? I mean, reclaim that. And then once we get reclaimed 75, the next hurdle you're basically looking at is, let's say, 75.40, 75.50. After that's out of the way, you've got nothing but, to a large extent, you really have nothing until new all-time highs at 76. Let's say all-time high was 76.26 and change, 76.20 roughly. So why not? I mean, why not? So it's really a lot's going to determine what happens. How do we handle 75? Because we're going to be at 75 tomorrow. I mean, at least if everything goes the way I kind of think it's going to go, we should be there or close to it tomorrow. And again, that's a 1% move. So you'd expect a 1% move off of this, this announcement from today.
Oh yeah, for sure. At least I would say. Like I'd say this is somewhat of a catalyst announcement. Or here's the thing: like the market has been kind of into like, deal's gonna come soon, this and that. We've fed this for a while now, right? And what if the market's been running up this entire time as in buy the rumor, sell news? What do you think the odds are of that?
Oh, anything is possible, but I think
For sure.
I think
Is a true catalyst.
I think because we had the selling because of SpaceX, I'm not sure if it happens again now. Again, I think a lot determines a lot. I think a lot depends on really what we do tomorrow. As weird as that's going to sound, do we hold the gap or not? And if you come in tomorrow morning and we're basically flat, that's telling you something. But if we're basically pushing 1%, let's just say tomorrow, it's probably going to be a gap and go. Now, is there much juice to it? I think that the bigger issue right now is that nobody really knows what's in the deal. That's really the bigger issue. They just hear deal, 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 but nobody really knows what's in the deal. Like, is it really good for the U.S.? Is it not good for the U.S.? Like what's in this deal? That will really be, I think, the catalyst for whether or not the stocks go up or down. Because it's trying to figure out now what's actually in. Because no one knows what's in it. That's the biggest
Yeah,
problem.
I've been reading some
You go ahead.
speculation
Yeah.
on like the naval blockades are gone, allowing passage to the Strait of Hormuz. Um, that's really the biggest thing that I was reading. I didn't really glean anything else from it though.
Yeah, I mean, I
But
saw a
yeah, I
thing that
think
they're going
right.
to.
I think selling from the SpaceX cleared up for a higher run, based off of this.
Yeah,
So
yeah, for sure.
basically,
I mean, they're
then
going to suspend. Yeah.
go ahead, go ahead.
No, I was going to say something I'm seeing now is that they're potentially going to suspend sanctions on Iranian oil and petrochemical sales. Like, why are they doing all this for? So the interpretation to me is that he was desperate to get out of this thing. He got in.
Mhm.
He realized he had no way out. He's looking for a way out of this thing. He's basically, to a certain extent, found a way out that he could claim a victory. Each side's going to claim a victory, but the reality is the
Yeah.
deal could be a lot worse than the one that he tore up. So, like,
Mhm.
realistically, what do we gain here? So, I honestly, I'm not sure. I think once the market knows what the deal is, it'll be a different story.
Mm.
But I think this was just really a way for him to just get out of this thing. I think he's desperate to get out, just literally desperate. So now he found a way out.
Right, especially with primaries coming up and whatnot. Um, yeah, I think that's a good thought. That's a good thought. We're getting an initial catalyst move, just simply off the news, but the real
Yeah.
price action and the real telling of the story will come after we actually understand what is in the deal.
Right. Agreed.
Right? Yeah.
Mhm.
And
Agreed.
then, so what we need to look for if we are entering a choppy market and how to handle that is, again, going back to the semiconductors, watching SOXX, SMH, and seeing if this, if it fails to make a higher high, if it fails to hold a high, and see if the MAs start flattening out. They're pretty nicely up right now. And we just got to keep an eye out for that for any sort
Right.
of
Yeah. For
change,
right.
really.
Yeah. For right now, you really got to keep it that simple. As weird as it's going, you have to just
Yeah,
really keep it that simple.
it's your friend until it bends in, right? All
Yeah.
right, let's talk about oil. Let's say, what are we anticipating for oil coming this week? We are opening up
So
we are currently at CLN, so July contract. We're at 81.11.
yeah. So this is where it gets a little bit more complicated
Yeah.
because depending on where you're going and where you're reading, there is a fundamental issue here. There is a supply issue. Now,
Mhm.
it's not like you could just turn on the spigot and things just start flowing again. It just doesn't work that way. Number one, the shippers have to feel confident that they can put their ships through the strait and not get blown up. The crews need to be confident that they can get on the ships and maneuver and not get killed. So, and the insurance companies have to decide that they're okay with it and lower the premiums. So there's so many factors that go into this as number one. Number two, it's shipping. It's not a car. So these things take time to flow through. So it's not like all of a sudden everything's just going to start going and everything's going to be amazing. Everything is going to be, you know, rocking and rolling. I'm of the
Mhm.
of the theory that the paper assets were being forced down. I think by the U.S. government. I think the U.S. government is in there shorting futures and trying to keep the paper asset contained, because the disparity between physical and the paper is so outrageously huge. I think that they're there manipulating the market. Now, it's a conspiracy theory. I have nothing to base it off of. It's just what I'm thinking, because it just makes no sense why oil never ever really got things going. It just doesn't make any sense. The only way is if you have somebody in there selling. So I think that's what's going on. But in all reality, based off of what we do, in the group at least, you know, on a number line basis, oil has basically been neutral, neutral to bearish to a certain extent. It actually officially went bearish, Friday. So it's kind of, looking down. I mean, that's really the way we're looking at it. Um, There's no real catalyst now to push it up from a technical perspective, at least not yet. Anything can change. However, if things continue in the way that it's going, it probably has a 6 in front of it by the end of the summer, if not sooner. It could be even sooner.
Okay.
It could be even sooner. We could see a 6 in front of it. But again, if something goes wrong, and according to a lot of smart people in the energy space, a lot of people that I follow, the D-Day for the oil market is basically mid-July. So if things don't change by, let's say, mid-July, and things are where they are now, then oil could be, at least on the WTI side, could be 105 to 110. It really all depends on what happens. And it's 4 weeks from now. So there's a lot of time between now and then, but it's really not a lot of time. So it's touchy. It's very, very touchy. Technically, market is bearish. At least in our world, it's technically bearish, neutral to bearish.
Mm-hmm.
But on the fundamental side,
what do you got as the cumulative?
It's very bullish. What
do you have as the cumulative right now?
0.
Okay, -4. Yes, which that aligns with the whole macro, though, right? If this is all true, if it all were out.
Yeah, I mean, listen. At the end of the day, realistically, we kind of broke the box. We were measuring a box about 103-ish to about 92 to 103. We've broken that box, and we're clearly going down. So we start getting down there. We could start moving in a hurry. We could definitely start getting down there in a hurry. So it's anyone's guess where this thing is going to go, at least on the paper asset side. Physical is a whole different ballgame, but we're not dealing with physical, we're dealing with paper assets. So, there's what to do. And, but at the same time, you can't look at it from, okay, so it's went from 90 to 80. Okay, it's going to bounce. It doesn't have to bounce. It could literally just keep going. That's just the way commodities work. The way commodities work in general is they're very to a large extent, they're pretty price stable. So what they do is they may have runs where they pop out and they make a run, up or down, but they always pretty much find their way back to where stable price is. So stable price in oil is about $50-$60. So that's probably where it's headed. At least by the end of the summer, it's probably where it's headed. Your sweet spot for oil is basically, if you're an oil company, is in the $60 to $80 area. Anything above that, you run into an issue from demand that starts to pinch the customer. Anything below that becomes problematic, financing or finance perspective. So your sweet spot is basically like in the $60 to $80 range, give or take. So we're basically at $80 now. Mm-hmm. So we're kind of back to the sweet spot. We're at the upper end of the sweet spot, but that's kind of where we're back to.
Fair. Yeah, oil it's pretty challenging to trade. Hopefully this brings it back into play and actually be playable. For me, it's been hard to trade, especially in this range. I ain't able to do much personally. That's fine.
The correlation between oil and S&P is definitely broken. That's over.
Yeah.
So there was a time where oil went up, S&P went down. That's officially over. And not because oil is going down, S&P is going up. It's just the news that's affecting oil is not affecting S&P anymore. The correlation is busted. So at this point in time, you can't even trade one over the other because it's just not there. So you have to realize that as well.
Right. What else, commodity wise? Are you looking for anything specific other than oil this week?
Yeah, I've been looking at coffee. I've been looking at coffee. I think coffee is going to start. I want to see what coffee does. Especially given the 50% rule. Coffee has basically closed the week 50% from where it started, off the low. So if there's any commitment to the low, to the downside, I want to see it kind of roll over. My ultimate price target on this thing is about 220, which is where I think we're going to get. We could, kind of shake the tree a little bit more on the upside and kind of get back up to, let's say, 260-ish, and
Yeah.
then, 265-ish area. It's an esoteric market that people don't really look at, but I think that's someplace that might be interesting. Natural gas is not in play as much as it's moving around. It's just not. I wouldn't waste as much time there. I think the grains had their kind of moment in the sun, and even with cotton, they had their time to reign, and that kind of has died out a little bit. So I think you're really, and to a large extent, I think metals are starting to wake up a little bit more from not so much a crazy trading perspective, but more of just from a risk perspective. Gold is looking more manageable, silver's more manageable, platinum's more manageable. That's what you want. Margins have not come down yet, but they are. One thing I want to bring up, which I don't know if you saw, CME wanted to introduce 24/7 oil and gold trading. I don't know if you saw that.
Whoa, I did not see that.
Yes, they were going to create a micro. So they were going to build a micro off the micro. So instead of it being $10, a dollar a tick, it would have been like 10 cents a tick. So every dollar
Wait a
move,
minute.
instead of
You
being
talked about this a while ago.
$100. Yeah. So they actually really started implementing it, but the CFTC shot it down. The
Oh,
CFTC said no. So the CFTC, bravo for them for finally waking up and saying, okay, enough's enough with all these products, because enough's enough.
for real.
You don't need 24/7. It's fine. It's not crypto. Calm down. So that's actually good. So that's kind of, waking up. I mean, outside of that, to a large extent, commodities kind of need a catalyst. So, right now, a lot of some of our guys actually have been looking at the cattle markets, which is an interesting place to be. But you got to really, you really have to have a little bit more patience with those, because cattle moves the way cattle wants to move. And there's not a lot of information on it, so you kind of have to be a little bit more careful with those markets. So right now, the place to probably be is in energy, and then probably coffee's moving around a little bit. Cocoa a little bit less, but coffee. Metals a little bit more. That's pretty much, grains are kind of dead for right now. So commodities are not really. You get oil. Oil will keep you busy. Oil can definitely keep you busy.
Yeah, for sure. Very good. All right. Thanks for the focus update there. Focus on oil, obviously, because of the news. Grains have probably had a heyday. Coffee's looking interesting. And then metals becoming more manageable, especially from the risk side, which is also nice, because they have been indeed challenging trade. They've been moving a lot, actually mostly after hours, which it seems like, but there's like gold is super whippy, which is a characteristic it seems to go in and out of. When it's clean, it can be clean, but I don't think that is the majority of the time. I don't think that's a normal characteristic of gold.
We're going to be. I'm going to be releasing.
That's for sure.
Yeah, I'm going to be releasing a commodities. Commodity. I've been doing these commodity master classes on each individual commodity. I'm actually doing gold next week. One of the characteristics of gold in general is it's very sweepy. It sweeps the book. It's just the way it trades. It's not bad. It's not vicious. It's just the way that it moves. So you really have to kind of understand, like, its natural movement is to be kind of sweepy. That's just what it does. So, and there's a lot more players in the gold market, because you got all the gold bugs. You got this. You know how it is. You got all these crazos in the gold market and the silver market, and I'm not going to name the guy, but everybody knows who he is. If you follow his advice on buying gold, not on miners, but if you follow his advice on buying gold, he's never talking about futures. And I think that's the biggest mistake that people make, is because they think he's talking about futures. He doesn't talk about futures. The reason why he doesn't say invest in futures is because he's not stupid. He realizes you can't hold them. So he's always talking about the physical metal, and he's talking about the miners. he never talks about the GC future, which to his credit is the right thing, because you'll never be able to hold on to it. So, and he knows that. So he's not like stupid like that. But you know, the problem with gold is that it goes on a run and then it basically kind of just dies out, which is what really happened here. So, our price target for the end of the year is about 3,800. Why 3,800? So, we figure, or I figure, that the way that 3,800 was kind of like a sweet spot where it was kind of bopping its head around a little bit. It's not really technically so important, but because the more important level is like the 34 to 36. I just think 34 to 36 is a little bit more of an overshoot. I don't think it's going to get there. So really, for me, the midpoint is like 38. I think that's where it's going to go. That's just where I think it's going.
See, it's got to break that 4,000 first. Yeah, for sure. If we can break that 4,000, I can sure see 32. Very good. All right. Topic of the evening. I'll let you take it away on this. We all go through it. We all go through slumps, no matter how amazing everybody seems to be on Twitter. Everyone is super smart winner and never goes through a slump. They're always correct. Everyone makes 1,000% gain every day. It's amazing. If only that were true. Slumps, in all seriousness, though, like, they're a very serious thing. And if you're a real trader, a true trader, I guess whether you're not, if you survive, let's just put it that way, you're going to go through a slump, right? Everyone goes through it. So you're correct on, I think it is a good idea to talk about this and how to handle that, because it is inevitable. As long as you survive in these markets, you're going to have to go through it a time or two, or probably many times, especially depending on how long you trade. So with that being said, I'll kind of let you take it. What kind of thoughts, ideas, recommendations? What have you learned personally that has helped you get out of slumps? What's just your overall experience with them?
So first of all, you're going in and out. Am I going in and out too, or is it just you when you're speaking? Do you hear
I
me
get
clearly?
it is just, I can hear you clearly. Can you hear me clearly?
It's like a little bit in and out, so I wasn't sure if it was me or you.
Can you hear me?
I do. Yeah.
All right. All you. So what have you, with your experience and being in the market for 25 plus years, what have you learned?
So I'll say full disclosure right now. Besides the fact that I mentor traders and I'm running a room, I also decided at the beginning of this year, or January, that I was going to run a small account challenge. You can see it on the website. We'll get to the website later, stuff later. Specifically, right now happens to be I am in a slump. I'm in a slump in that small account challenge. I'm in a slump in my regular accounts. I'm in a slump. It happens. Anyone who says that you're not going to go into a slump does not know what they're talking about, because it's inevitable. It's going to happen. It's going to happen many times, and it's just natural, and you got to deal with it. And if you try to avoid it, you're going to run into a problem. I always took the vantage point of, if I'm in a slump and I'm not trading well for whatever reason, whether I'm not seeing things correctly, my decision making is off, I'm picking the wrong markets, I'm not sizing into my winners the right way, or whatever it is. When you're in a slump when you're not trading well. You basically know it, and it's not really by wins and losses, because I can have a losing day and it could be the greatest trading day possible. Execution perfect, markets were perfect, everything was perfect. The trade didn't work, and it would be an A+ trade, and everything would be amazing. And even if you take the W in the trade, you still know that overall it was a great trade. When you're in a slump, you know it. You really know you're not feeling well. And when I say not feeling well, not saying that you physically don't feel. You don't feel it. There's something innately inside that tells you something is off. You're just not feeling it. You're not feeling something, and you know it. So what do you do in that situation? So the question becomes really not really what do you do? It's what do you not do? What you don't do is you don't try to size your way through it. When I'm trading my worst, I'm trading at my smallest, at my absolute smallest. Why? Because as I'm working through it, I'll take the small hits on small size just to work my way through and get what what I've always, referred to, because I actually got this from somebody else, and I love the concept, a P on the page. I actually got this verbiage from Larry Benedict, who's a market wizard, and he talks about getting a P on the page, a profit, a P on the page. Doesn't make a difference if it's $1, if it's $2, if it's $10, if it's $100, if it's $10,000, $1,000,000. Doesn't make a difference. Get a P on the page, because once you can get a P on the page, and you could do that once, twice, 3 times, 4 times, it's not about the money. It's about building that positive momentum behind you in order to push forward. And when you're in a slump, you need whatever you can to kind of push you forward. Wherever you can get that kind of momentum going. So what I normally do is I'll go down all the way to a small position size that still makes it worthwhile to push a button, but at the same time, knowing that if it doesn't go well, it's not going to hurt me. And then I'll let the P start to stack up. And as I start to stack up and I start to feel better and I start to feel more confident and I start to see things are going in the correct way, and that not necessarily might not be with profits, but it could be with just overall feeling, then you can start to slowly rebuild your size, whether it be every few days, whether it be, a week, every 2 weeks, however you want to do it, to kind of start working your size back in. The last thing you want to be doing is trading normal size when you're trading at your worst. When I'm trading at my worst, I'm trading at my smallest. When I'm trading at my best, I'm trading at my biggest. Right now, I'm in a slump. I'm working my way out of it. I was able to string some stuff together towards the end of the week, get some momentum going. So which was good. So, but again, it's on small size, not necessarily looking for quote unquote money, but looking more to build positive momentum behind me with these P's on the page, just to string it together. And you'd be amazed after, a couple of days of doing this, how all of a sudden your whole attitude, everything kind of just switches. Because when you're in a slump, not only do you hate the world and you hate trading, you hate the markets, but you're forcing things. You're forcing trades, you're missing trades, things go, you get pissed off, like things that would never bother you. Like for example, let's say for example you're an NQ trader, okay, and you had NQ and you just weren't feeling right, and you take it off, and the next some news comes out and the thing rockets 300 handles, and you get angry. That's called being in a slump, and you get angry because you're like, I can't believe this. And either A, you chase it and you get your clock cleaned, or you just get so upset because you were in it and you took it off. That you can't get affected by that. You can't be bothered by this. It's annoying, but it is what it is. And it's very easy to say it is what it is because I'm doing this long enough. That's precisely why I'm doing this long enough, and why I'm doing this so long. Because you have to be okay with it when you're trying to work out of things. Because if you have patience, things will be there for you. It will go, but you have to just work your way through it, but work your way through it small. It's a thing that everybody's afraid to go small because they're afraid that someone's going to look at them and make fun of them. Nobody knows and nobody cares. And the reality is, if you can keep your size small when you're not trading well, the ones that you're trying to impress, they're not really trading anyway. So over time, you'd be amazed how once you're out of it, you could blow them out of the water from a profit perspective. So you really have to just, it's easier said than done, but you really have to just keep a level head with this. Because again, it's so easy to lose your cool, lose your discipline, and then you see it all the time. If you're not even an acute trader, you'd say you're an ES trader, and you see the market's ripping. Oh, S&Ps are going on. I got to jump on. I got to jump on. And you jump onto it, and the next thing you know, what happens? You know exactly that. 5 minutes later, the thing is down 30, 40 handles, and you're like going, what the hell? And it just makes things even worse. So you have to be comfortable and okay with saying, I'm going to miss. The best thing you could do with a slump, if I could give one piece of advice, is say to yourself, I want to get a P on the page. And if you can even do a P on the page and make it a stupid number, make it a small number, something that you can hit. Let's say you're a micro trader, okay? Or let's say you're an S&P trader, or we'll keep it S&P, okay? Say to yourself, you know what? I want to get 5 handles on a $7,400 instrument. 5 handles is nothing. But it's not about the 5 handles. It's about get the 5 handles, shut the computer off. It's about maintaining the discipline, and you build on that momentum of, okay, I'm following a plan. It's a stupid plan. It's a silly plan. It's like saying I want to get into AQ and I only want to get 10 handles. Fine, no problem. But get those 10 handles and turn it off. Why? Because it's just ingrains in you that you've got the win, you've got the discipline, you've got the P. You'd be amazed at how much it will allow you to propel yourself forward as the days progress.
Well said. I love that. Get the P on the page. I've heard you say that over the past few days, or I've read it. I know you've you put it in the chat quite a few times. I completely agree with you. I think one of the hardest things, especially as a newer trader, number one is recognizing what it is to be in a slump, because it's not just about, it's not only your cash, your account taking the hits, which I think at least I did. That was it. It's like, oh, I'm in a slump because my account is down. And it took me a while to realize that being in a slump was much more than just my account being down. It was more about my mentality towards the market, the pressure that I felt to make the money back, the pressure that I felt to click more buttons to catch back up. And then, obviously things don't work as well as they typically do because you are not seeing things well. And then you just spiral from there. And
sure.
ideally you stop yourself from spiraling. So hitting a slump is much more than your bank account going down. It's much broader, and I don't know about broader might be the right term, but it's much more intricate than just your profit. And one of the harder things to do, I think, as a new trader, is to recognize within yourself your individual signs of being in a slump, not just your bank account.
Well, let
and
me
your profit
interject.
loss numbers.
Let me interject, because it's what you're
Yep.
saying is amazing, but it's not just beginners. It goes for everybody, because everybody goes through it. And even guys who are experienced, no one wants to admit it until it's too late. And it's not, the slump is not the numbers, because at the end of the day, your numbers are your numbers. That's not what's going to make or break you as a trader. A slump is when you know for a fact that you're not taking trades, you're gun shy. And when you're not gun shy, you're taking the wrong things and you're not comfortable, and you know you're not comfortable, and you're second guessing everything. You know when you're in a slump. A slump is not necessarily, I mean, obviously we're measured by P&L, but that's not really what makes or breaks a slump. A slump is when your decision making is off, and you know that it's off, and you're taking things you shouldn't be taking, and you're not taking things that you should be taking, and you're kind of second guessing everything. You know what I'm talking about. You know what I'm saying? Like, you can tell when things are not right. You can be like, hold on, something's off, something this. You know something is off.
Mm-hmm. Yeah,
I was. It's not just
yes.
the futures.
Go ahead.
Oh, no, I was saying it's not just the futures. It's in stocks. It's in anything. You know when you're off. Like, you know it. Like, okay, something is wrong today.
Right. Yeah. I completely agree with you. One of the harder things for me as a beginner trader, honestly, even it took me a while, probably into year 4. I'm just gonna be honest, year 4 took me 4 freaking years to get my head on straight, but it is what it is. To kind of reel in expectations and understand and learn what it is to be in a slump. So for me as a newer trader at that point in time, that was a hard pill to swallow. And it was something challenging to get around, because you come into this business and everybody makes it, all Lamborghinis, and you're making millions within 1 week of trading. Not that I actually believe that. Yeah, it'd be awesome,
Wish it
right?
was that easy.
Everybody would be doing it if it was that easy, right? This is one of the hardest things I've ever done in my life, and I've done some pretty challenging educational stuff. And this is on the realm of that level, if not harder, because you have to fight your own battles. You know, you can do all the learning and all the reading and all the technical analysis and all the mental challenge games and this and that. You can do all, but what it breaks down to is if you can actually get your stuff together and control yourself. So it's really a battle about you. I'm going to go on a rant there, but I'll yeah, just
No, I want
moving.
you. No, I want to hear. What did you do? Let's say. How did you do? How did you do it? Come on. How did you?
What
What were the signs that you saw, and how did you get out of it?
Yeah, so I would describe it as pressure. Um, I I would I would take a lot of trades. I would take a lot of L's, lose and lose and lose. And then I would not size down. Number one, I wouldn't size up, but my reasoning was, hey, you know what? I'm going to make my stop loss a little closer so I can have a larger size where my risk reward would come quicker and I can get a quick R and R out of the way. So for example, let's say my typical, I like to have a 2 to 3% stop loss. No, really no more
Okay.
than 3.5, 4%. I would do, you know what? I'm going to get in. I'm going to maybe get a 0.5% stop loss. And that means at a 1% move, I'm up 2 to 1 in an R. And then let's say that happened. And then I'd be like, oh, then greed would come in. I struggle with greed, which is part of the reason why I struggle with taking profit. And so, oh my
You
gosh, and
struggle
then
with
two,
greed?
yeah, I
You
do
say
struggle with
greed or
greed.
green?
Greed,
Oh, okay.
Greed, as in David. Greed. I don't
Got
struggle
it.
with
Got
green. I like green. Um,
it.
yeah, no, that's not a problem. And so, now I get that 1% move, and all of a sudden I'd be up 2 to 1, and like, oh great, now I can hold it. And I'd be up 10 to 1, and I still wouldn't take my money. And all of a sudden, at that point, it takes a 3% pullback to take you out. And then I would lose. And then I'd eat myself up and I'm an idiot and this and that. Why didn't you make your money? Blah, blah, blah. And then you're like, all right, I got to get this next one. Then you move right on to the next thing. You look on FinX, what are the high flyers? And then you just go right to it. I never stepped away. I think that was the biggest change in
Okay.
me, is to step away and from the screens, like even get off of X, get off of everyone talking about everything, and literally don't touch the market for however many days that I need to. If it's on a Monday, guess what? I'm done. I'm done for the rest of the week if I felt myself going on tilt. That's basically what I did. I learned that my signs is I made excuses to decrease my stop loss in the thought of I will get my gains quicker. Yet, when I did get my gains quicker, I was not disciplined enough to actually take my profit. And then I would get stopped out for a loss and the cycle would continue. And mentally, it drove me nuts.
Okay.
Um, and that was once I learned what that feeling was, and once I learned that I was in that cycle, that's how I knew I was in a slump. Like it never registered to me that that's what a slump was. Um, but then once I stepped back, I was like, oh, you get a clearer mind. You're actually starting to, when I mean step back, I mean when I learned to step away and shut things off and come back with a clearer mind, that is what kind of lifted the fog out of my eyes, the clouds out of my head,
Okay.
to realize like, oh, that's what a real slump is. It's not just about my profit loss. or my not my profit for sure. It's not just about my loss. It's about where I'm at mentally. So I had to struggle through it.
Well, listen, it is a mental game, so it does make sense. Everything you're saying does make sense. I mean, it is a mental game. This is a mental torture game. It really is. As
Yeah,
weird as that's going to sound, it is. It is. It doesn't take a lot to do. I mean, the reality is the job in general is buy. I mean, it's not rocket science. It's buying and selling. I mean,
for
there's not
sure.
much to this. It's either you're buying or you're selling or you're doing nothing. It's what happens in between the buys and sells that really that's what creates all the problems. Like that's really where it's a
Hmm.
mental torture game. That's really where it is. The ones that
Yeah, learning
make
to
it are the ones
prepare
that
ahead of
survive.
time. Yeah,
It's not even the
yeah.
preparation. It's really more because you could be prepared and you could still lose your cool when the bell rings and be all over the place. So it's really more, I
Yeah,
think, a
it's a fair
function.
point.
I think it's really more a function of staying disciplined. If you can stay disciplined, you're going to be all right. If you cannot stay disciplined, you're going to be toast. You're just going to be toast. No matter which way you look at it, you're going to be toast. It's all about discipline.
It really is. Discipline, learning how to control yourself,
Yeah,
making sure you're
it's
doing your homework ahead of time so you're thinking less while the
yeah.
markets are live.
When the market's open, you just want to be reacting. Just react, react, react. And the faster you are at your reaction times, the better you're going to be as a trader. But you can't react unless you're prepared and you know what you're reacting to. If you don't know what you're reacting to, then you can't do that either.
What do?
Like you have
We
to,
gather data, analyze data, create a plan, execute the plan,
right?
right?
Exactly. It's the four-step decision-making process. It's
Yeah.
it's gather the data, analyze the data, make a decision, implement the decision.
Decision. That's what it was. Decision, not
You
plan.
know,
There you go.
that's really what you're trying to do. So you know, if you can do all of that, then you'll be fine. If you can't, then you know, like what are you doing? You know what I'm saying? Like you have to really, really be um what's the word? You really have to be be planned. Like when I say
Right.
planned, like you have to really be ready. Like if you're not ready, then you're not going to go anywhere. Like you really have to be ready. And that really comes down to how you do your homework. Like you really have to have your homework ready. You have to have everything ready to go. Like, okay, this is what I'm doing. If the market does this, I'm doing that. If the market does that, I'm doing this. And just you stick to it. And that's the end of it. If you're coming in and you don't really know, like if you're coming in, you're like, okay, what are we going to do today? I'm not really sure. And okay, what are we doing? That's not going to work because you're coming into a situation and you're not really planned. You're going to be moving in an impulsive fashion, as opposed to in a more, I don't want to say aggressive, but you can't be aggressive because you don't really know what you're doing. You're really okay. I know what I'm doing, but you're not really planned for it. It's more like you're waiting for the market to do something, and then okay, based off of what it does, then you're going to do something. As opposed to, if the market does this, I'm going to do this, and if the market does that, I'm going to do that. Instead, you're more like the market's doing this. Okay, I think I'm going to do this now because I guess because the market's doing this. So that's not really a plan. That's really more okay, whatever. And that's
Hmm.
where you have to really have your shit together, so to speak, because you can't walk into it that way. A lot of people like to assume that they get in and they just look at a chart and they'll be ready to go. If it was that simple, then no one would be planned. No, everybody would just be winging it, and everybody would be making $1 bazillion. But that's just not reality. It just doesn't work that way.
Hmm.
So,
You follow me.
you gotta really you have to do your homework. You don't do your homework, you should not be there. You just shouldn't, in general.
Yeah,
Like, how do you
those are
expect to get
nice
out of slump?
guardrails.
Right. Like, how do you expect to get out of a slump? Like, how do you expect to maneuver? You don't even know what you're getting in and why. That's why I'm very against stock traders who use scanners, because they use
Yeah.
it as a crutch. They don't know what they're getting into and why. They just see a thing. Oh, this is moving. Okay, I'm getting into it. But you don't even know what you're getting into. We'll leave that as a topic for next week.
Yeah, I like that. I like that topic. Very good. Good stuff. Good stuff. Do you want to add on any closing thoughts to that slump topic?
I think if we just take it slow and you plan and you just look for small wins, just look to put a P on the page, you'll be okay. If you can do that, you'll be okay. But you have to be willing
Beautiful.
to put the work in and say, okay, if this happens, I'm going to do this. If that happens, I'm going to do that. Like, you have to be willing to really, do the work, so to speak. You really have to be willing to do it, and then you'll be okay. But you have to be willing to work through the process. Small, and you got to do it small. Must. It's a prerequisite. You have to be small.
I think we're going to go, I'll say this real quickly then. Earnings, nothing crazy next week. And Tuesday, I guess we got building permits, housing starts. We have retail sales on Wednesday, FOMC, and then Fed press conference on Wednesday.
That's Warsh's
We
first.
don't need to talk about that. Yeah, Warsh's first. That'll be good. I'll be looking forward to listening in as I can. 2:30. We'll see. I might have to watch the recording. Either way, let's not talk about that, because I think your closing was a great way to end this. Unless you have something else you like, Spencer.
No, I'm good. I'm good. I want you to close it. Wrap it up.
So Dan, cool. All right. Dan, let's share your socials. Where can people find you? What's your website? Obviously, we have your X handle here. What's your YouTube? All this good stuff. I will also share it in the comments below once we close everything out too.
Okay, so let's see. So you really caught me off guard. Okay, so the channel is at FPT Trading Group .YouTube. That's what it is. You're gonna have to link it, because there's no way I'm gonna be able to. I think it says
I got you. I'll put a link in there.
At FP Trading Group. Wow, that's the YouTube. The website is Fish Pond Trading Group. That's pretty easy. Awesome. One of the things that we have on the website, which we feel is like we think, besides the small account, but we think that one of the things that's really we're surprised that people don't take more advantage of it. When I built the website, one of the things that I put in something called contract specs. And that gives not only what the contract specs are, but it gives a little bit of like a note as to how these things actually move, what the spreads are like, just a handy reference if you're looking, at some of these contracts. And we did it for all futures contracts, every single one. So it's worth checking out, just to, even if you're not, looking so much into the website right away, but maybe it kind of acts as a segue. You can look at the small account, but I think the contract spec thing, I think that's probably the greatest reference you could have out there, because obviously it links also to the CME page and to the ICE page, but it gives you a more of a trader's perspective of what to expect in some of these contracts. So, and I think that's one of the disservices a lot of futures traders do, is that they don't know what they're trading. They think they're trading oil. I'm not saying that they're not trading oil, but they don't understand the contract. Like if we had the conversation earlier about gold, it was saying how gold sweeps the book. Like it by nature, it does that. You're not going to get that from anyone. Who's going to tell you that? So it's just, I just think it's like a good reference, to kind of look at, as well as the small account challenge. Just the small account starting off the month red. It is, because the account is in a slump. Hopefully we'll get out of it soon.
Yep.
And the month
we will.
green, and we'll go from there.
Absolutely. Alicia, I did give you a invite to speak if you have anything you'd like to share or any thoughts on today. If not, that's perfectly fine too. Otherwise, again, Dave, Built by Trading. You can find me at Built by Trading on YouTube. You can also go to my website, builtbytrading.com. basically on there, it's got my X links, it's got my YouTube links, but it also has the app that I'm building out to help automate the Mark Fisher ACD process, basically throughout the entire day. Go on the website, check it out if you're interested at all. I'm about to roll it out to a few more beta testers. Other than that, like, subscribe to both of our channels, support us, join, share your thoughts with us. We're always here to work together. We got a great group, always looking for other great traders and like-minded individuals to grow and develop with. So with that being said, thank you for your time.
Before we hang up,
what was that?
I said, before you hang up, if there's anything that anyone wants us specifically to discuss, like a topic that they would think we should be talking about, send it in, and then we'll, if it makes sense. Like today we talked about slumps. It could be something else. Like how do you deal with a bad day or whatever it is? You want to get a real trader's perspective from. So be sure to submit that.
Absolutely.
We'll try and help you out with that.
Yep. Great, appreciate that. Yeah, if you guys got any thoughts, random topics that you find valuable, we would obviously love to talk about it from a true professional trader's perspective. All right, Dan, thank you for your time. Elisa, thank you for joining in, and be prepared this week. And we will we're doing this next week, yeah?
Yeah.
All right, cool. We'll see you next week. Have a good night.
Have a good night. Thanks a lot.